When the average Brit sees their car insurance renewal notice, the reaction isn't typically one of joy. However, for residents in certain UK hotspots, the envelope's arrival can feel like adding insult to financial injury. The uneasy awareness that one lives in one of the UK's priciest car insurance regions can ignite a mix of frustration and resignation. The numbers can be stark. In some areas, drivers pay nearly twice as much for their car insurance compared to their counterparts a few counties away. This phenomenon isn't coincidental, but is a vivid illustration of how location influences insurance companies' pockets, and by extension yours. This essay explores the underpinnings of this uneven financial burden, revealing not just the where, but the why of these pricey premiums, and offering a lens through which potential solutions might emerge. The landscape of car insurance premiums in the UK. The price disparities in car insurance across various UK regions can be surprising to many. Birmingham holds the title for the highest premiums in the country, closely followed by areas like Manchester and Liverpool. The differentiation in rates is primarily influenced by the likelihood of claims being made, which in dense urban areas is significantly higher than in rural counterparts. This is fueled by higher rates of vehicle thefts, accidents, and vandalism seen in urban settings. Insurance companies also consider additional factors such as local road conditions, the frequency of bad weather, and even the average speed on local roads. For example, the narrow and often congested streets of historical cities can heighten the risk of minor scrapes and collisions, thereby increasing the likelihood of claims. This situation is compounded by the postcode lottery, where insurance costs fluctuate dramatically within even small geographical areas based on crime statistics, access to secure parking, and even the local rate of uninsured drivers. The postcode a driver resides in can dramatically alter the price they pay for insurance, sometimes irrespective of their personal driving history. Regional economic conditions and their impact on car insurance. The correlation between regional economic conditions and insurance costs cannot be understated. In economically deprived areas, the incidence of crime, including car theft and vandalism, tends to be higher. This elevates risk factors for insurers, which is duly reflected in elevated premiums. Additionally, these same regions often suffer from higher rates of unemployment, which paradoxically increases the number of uninsured drivers, yet another variable that drives up costs for insured drivers. Moreover, average local incomes and the general cost of living also play crucial roles. In wealthier areas, residents often choose more expensive cars, which are more costly to insure. This creates a contrasting scenario across different postcodes that are sometimes just a few miles apart. The dynamics of this economic landscape suggest that addressing car insurance premiums requires a multifaceted approach, not just focusing on the symptoms, but also on the underlying socio-economic issues. Insights and solutions from industry experts. Tackling the issue of high car insurance premiums, especially in hotspot areas, requires innovative thinking and collaboration. Industry experts advocate for the implementation of technology-based solutions such as telematics. These devices, installed in vehicles, monitor driving behavior. Safe driving recorded by telematics can lead to lower premiums regardless of geographic location or socio-economic context. Moreover, improving public awareness about vehicle safety and anti-theft measures is essential. Educating drivers on the importance of secure parking and the installation of anti-theft devices could lead to a reduction in crime rates, subsequently resulting in lower insurance claims and costs. Policy interventions are also crucial, with calls for regulatory changes that could mandate insurers to consider individual driving records more heavily than geographical statistics. Additionally, increasing the penalties for uninsured driving and enhancing the economic development in high-premium areas could help balance out the disparities in insurance costs. Understanding that high car insurance premiums are a complex issue influenced by a myriad of factors is crucial. It's not merely about penalizing high-risk areas, but about fostering safer, more secure communities that can eventually lead to equitable premium rates across the board.